Red! Tell all the other curs the law's coming! You tell them I'm coming! And hell's coming with me, you hear? Hell's coming with me!
Hello, everyone. Welcome to a Friday edition of Real Estate Realities with the Rebel Broker. My name is Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. We're going to turn the market around today. We are going to look at it from the complete other side. We've been trying to talk about solutions. What makes the market more balanced? How do we get things going on a more reasonable basis? And we've been talking about it all from one side of the equation. I've been complaining about how the majority of the folks out there, the pundits, have been talking about the wrong solution to the problem. And I've offered up the inventory solution, but there is a third solution here. So we're going to talk about that today. For those of you who'd like to get in contact with me, feel free to head over to the website, therebelbroker.com. Click on contacts in the menu bar. Send along any ideas, suggestions, observations, or questions that you might have. Happy to reply. While you're there, please do click the big red button at the top of the page titled Take the Survey to support the show. By doing that, you're going to be helping the show grow, and I am forever in your debt for that. Thank you very much for those who have already done it. But in order to show my appreciation, I will also put you in a drawing for a $50 Amazon gift card. Now, we've been doing this once a month now for, I want to say 4 months. All right? Yeah, is that right? No, more than 4 months because we're up to $400. At least I think that's where we're at. In any event, it's going to happen again in May, and this is your chance to get in and get your name into the hat for a potential win of a $50 Amazon gift card. So congrats to the folks who've already won, and good luck to the folks who are about to go to the site and click that little red button. And as usual, the best way to join the Rebel Underground to get the inside scoop on stuff. And I wish I had a member of the Rebel Underground right here with me who could tell you that this does not turn into spam. It does not turn to me pestering you to buy things or anything like that. It's strictly just a way for me to, on occasion, when it makes sense, reach out with additional information. I have so far done that one time with an exclusive video that's only available for the Rebel Underground. And of course, if you join the Rebel Underground, then you'll get access to that stuff. The best way to do that is to text the word Rebel Broker to the number 44222. That's text the word Rebel Broker, all one word, to the number 44222. You'll get a response which will make it clear that you've sent this to the right person or to the right machinery. Simply follow the prompts and then you'll be added. If you would rather not do that, you can go to the website, therebelbroker.com, check out the show notes for today's show, and there will be a button in there, a nice little red button that says click this button to join the Rebel Underground. So there you go. Okay, we're going to start off with some particularly good news. Although, I mean, we're still talking points, very small percentages of changes here that make this kind of a milestone day. But we are now below 4% again in lending for the most part. This update comes to us from the good folks over at Freddie Mac. Quote, the 30-year mortgage rate fell 11 basis points this week to 3.97%, dropping below the psychologically important 4% level for the first time since November. And I guess it's okay to call that a psychologically important level, but what's interesting to note is there's no real data to demonstrate that it's a psychologically important number. Now, we've talked out in this show about, you know what? There is a psychologically important number. There is a number that at some point pushes people into like a frenzy mode that'll start off with, we need to get a loan before rates go up even more. And then when it goes to a certain point, it'll actually start to depress the process, or perhaps not depress the process, but switch the process so that folks will start shopping for lower priced homes in order to maintain that monthly expenditure that they're trying to achieve. But I'm just not sure 4% is that number. There sure hasn't been any evidence as we've danced back and forth between 3.9% and 4.1% over the last year. You sure couldn't point out a direct relationship between that number and homes in escrow, offers being submitted, folks trying to get escrows going and mortgages going. So I'm not real sure 4.0 is the magic number. I'm sure that some people think well of it starting with a 3, but for me, psychologically important equals a change in behavior, and I'm just not sure that that's what we see. Now, what we might see what we might see is folks locking in a rate at this. That'd be interesting to see if we see this week an increase in the number of purchases that people feel like this is their last opportunity to get a 3-point something mortgage. Maybe. I don't think we'll see that, though. In similar instances over the last year, we didn't. So there you go. According to this also, that's 3.97. The 15-year fixed rate mortgage dropped to 3.23, down from last week's 3.34, but up from last year when it averaged 2.85. The 5-year Treasury indexed hybrid adjustable rate mortgage dropped to 3.1. This is down from 3.18 last week, but up from 2.81 last year. Now, the good folks at Freddie try to explain this with the following, quote, weak economic data. And I'm not real sure what they mean by weak economic data. I mean, we've seen good unemployment numbers. I'd love to get more information from them on what they call weak economic data. And growing and optimism numbers and confidence numbers are all good. Anyway, growing international tensions, okay, granted, there is that, are driving investors out of riskier sectors and into Treasury securities. This shift in investment sentiment has propelled rates lower. So what do we draw from that? I think we draw what we've always drawn from these numbers. I don't see anything happening with interest rates that needs to factor into us worrying about whether or not the number of buyers increases or decreases out there. Now, clearly, just as when we were talking about what happens when interest rates go up, people shift their buying practices or their search criteria perhaps for a home. If interest rates continue to go way down, their ability to purchase more expensive homes goes up simply because for the same amount of money per month, they're able to buy a more expensive home, right? And assuming that their down payment can increase with that as well. So that kind of stuff could play a part, but I think that's around the edges. I think those are corner cases. I don't think that's the mainstream bulk of the market out there. So I really don't think that we need to get too preoccupied about what's going on with interest rates right now. A lot of folks want to get wound up about this. I realize you guys are probably seeing tons of headlines that either want you to completely freak out and not buy something or completely freak out and buy something. There seem to be both flavors of pundits out there. But I really, at this point, in terms of trying to make a wise decision based on what the market is going to do, and by market, I don't mean banks and interest rates. I mean buyers and sellers. Because that's what we're about, right? We're trying to worry about competing in a marketplace where there are whether we're a buyer or a seller with other buyers and sellers. Now, so that kind of lays the ground for that. Now, the next thing I wanted to talk about is sort of a interesting return to something we talked about a year ago. Now, for those of you who've been listening that long, and for those of you who haven't, let me do a quick recap. Last year, the big news was, at least the big news I was pushing, was that, the millennials are not the group that everyone seems to think they are. They seem to be a group that are going to stay where they are. They're going to continue to rent. They're going to stay with their parents. They're tending, and if they do want to buy, they want to just buy a home that they plan on staying in for a much longer time. That's what all the data was indicating, and we were going with that. And then there was a shift as we headed into the end of last year, which grew as we came into this year. And we started to see reports that seemed pretty reliable that we were going to see millennials jumping back in. Well, here's another take on that. And we'll talk about that in a second. I'm going to take a quick break here before we jump in. But this could be an interesting dynamic in the way the market's moving, particularly since the expectation is that millennials are supposed to be such a big chunk of the buying public. And this is where we start to talk about what's the other thing that would affect the marketplace. We talked about more homes, but what about fewer buyers? What if the system simply doesn't create the number of buyers that's expected. We'll talk about that a little bit more right after this.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Hello, everyone, and welcome back. Kind of an interesting way to look at this, right? We've done a lot of talking about what the real solution is on the market side of things in terms of houses. It's not about lending more money or allowing more people to borrow more money. It's about getting more homes into the marketplace. But what if we come at it from the opposite side? What if we say, the other way to make this a stable situation is to reduce the number of buyers? And given the fact that we've seen some increases in building, now again, the levels of demand I'm seeing are still indicating that moving forward, it's going to continue to be a robust marketplace. It's going to be difficult. It's going to be hard for buyers. It's going to be great for sellers, at least in my area. But given the data we're about to talk about, it seems like a reasonable thing that we may just see a slowdown in at least the total number of buyers at any one moment. Now, does that end up getting us to the point where we start to actually see not multiple offers on homes? Maybe so. So let's explore this concept for a second. And if we start to see more indicators, now this is sort of foundation work, right? What we'd be looking for next would be indicating dips in the amount of volume, remember, it's hard to pin down because right now the limiting factor is the inventory. So when we see the lowest number of homes being sold but the highest amount, that tells us clearly the demand is there, right? These are homes that are clearly selling for multiple offers and going for high prices. But one way that this might get dealt with is this sort of an attrition where we see the buyer volume go down. And in moving forward, what we might want to pay attention to is more what's happening with pre-qualifications, for instance, for loans. We're seeing more buyers this quarter getting pre-qualified or fewer buyers than the same quarter last year, that type of thing. That might be a better way to get a leading indicator of what we're seeing in terms of the level of demand for buyers to get homes. Now, we're going to jump first to Zero Hedge. There's two angles to this, both of them aimed at the folks who are supposedly going to be making up the lion's share of buyers over the next year. At least that's what all the pundits tell us. Everyone is, again, putting a whole lot of stock in millennials. But this chunk of data that I've come across actually dovetails pretty well with some of the data we were talking about just about a year ago relating to dominant influences or dominant trends within that group of buyers that we refer to as millennials. Of course, as always, I'll include a link to this article in the show notes, so feel free to check those out over at therebelbroker.com if you'd like to check out these numbers for yourself. I will also be pinning to Pinterest an interesting chart that gives a breakdown of the folks we're talking about here. So let's jump in. And this is quoting the article. These days, millennials seem to be embracing the free room and board provided by parents. According to a new study from the Census Bureau, roughly 1/3 or 33% of all millennials live at home with their parents, and 1/4 of them can't be bothered with enrolling in school or finding a job. That is a gigantic proportion of the millennial folks that are relatively idle, right? That are not big participants in any market, whether we want to talk about real estate or anything else, other than potentially pizza and whatever else they're consuming in the basement. And And that's kind of interesting to ponder, because if you've got 1/3 of a group that is supposed to be backfilling this demand for real estate over the coming year, it's hard to imagine that happening with this chunk of folks. Let's see. This is the chart I'm going to be pinning is from Bloomberg. There are 2.2 million millennials who live at home with mom, but neither attend classes nor have a job. Of those, 40% of them are already in their 30s. They're predominantly white and have a high school diploma or less. So this clearly may not be as dominant for folks that have the college degrees under their belts. But bachelor's degree or higher in terms of the 2.2 million folks who make up this group, the ones that have a bachelor degree or higher make up about 12%, according to this chart. And again, I'll go ahead and post this up to Pinterest so you can look at it for yourself, because it's kind of an interesting breakdown. Now, whenever looking at data like this, we want to get an idea of its longevity, right? Is this a brand new thing? Has this been going on for a while? Well, as we know, because we've talked about this before, this has been going on for at least several years. 90% of the millennials living at home last year are still there this year. So a very low number, only 10%, are exiting this situation, which would mean they become renters or they become buyers. In 2005, the majority of young people lived independently in their own household, either alone with a spouse or an unmarried partner, which was the predominant living arrangement in 35 states. By 2015, just 10 years later, only 6 states had a majority of young people living independently. That is a big market change, right? When you get that many people who, if you are a landlord, aren't coming out and becoming customers of you in terms of renting a home, or if you're a flipper, aren't coming out and buying that home, that has a really big effect on the overall marketplace. Now, here's the other part, because you can say to yourself, well, okay, Robert, come on, that's only 1/3 of the millennial population. All right. But let's also take this to the next level and think of it in terms of competition for real estate. So whether you're a real estate investor who's looking to buy that next rental property or flip, or whether you're a buyer who's just looking to find that next property, it's always good to get an idea of what might be happening with competition, right? Well, the other piece of data that I think dovetails interestingly into this is another report from Freddie Mac that renters are expecting to stay where they are. Fewer now than last year say they are working towards home ownership, and that spells an interesting marketplace for folks moving forward who may find themselves with less competition because a lot of these renters may not be stepping out to find properties of their own. Now, here comes another interesting part that I think is going to play an interesting role in what the makeup of buyers over the next year might be. Now, renters are optimistic, according to a Freddie Mac renter survey. Renters are optimistic about their financial situation and say they don't expect to move even if their rent increases. All right, so we've got, and here's what's interesting, right? Some of these things that they're getting out of this survey that you would say, oh, okay, well, they're confident about their financial situation. They're optimistic. That must equal a bigger desire to move or a bigger desire to purchase. That's what is interesting, because that's not what we're seeing. Quote, a declining number of renters say they are working toward home ownership, expecting to buy a home or even move within the next few years. So these are folks who have decided, you know what, renting is okay. It's not only okay, I plan on renting what I'm renting right now for years. But they also say that they would move into a smaller rental unit to be closer to a city if that was required. So they're willing to sacrifice size and continue to pay about the same rent to get more into town, for instance, as opposed to even considering the option of purchasing something. Nationally, those saying they expect to rent their next home increased to 59%. So despite the fact we've got folks taking that financial optimism and considering it as a fuel towards buying a house, it's fuel towards renting. Now, that increased to 59%, and that's up from 55% from September. So not even a full year ago. That's a pretty dramatic change over that kind of period of time, since we're not even talking about a year. Now, in addition to the more positive outlook about renting, there are fewer Americans saying that now is a good time to buy. So it's a bizarre mixture, right? You've got folks saying, I feel economically optimistic. You've got them saying, I'm totally jazzed not only to rent today, but for years to come. And I don't think it makes sense to buy. So at this point, the way in my head to try to explain that is, what does that spell for these renters? What is it that's in their head where those circumstances don't equal buy a house? Well, the only one I can think of is purchase price, right? That's the biggest, boldest, underlined and highlighted element of buying a home, because these folks are financially optimistic. They're making more money. They are having more money at the end of the month. So down payment would seem like a less challenging option, right? If they're able to save more money. And that is one of the things they're doing. More of them are able to save money. That is one of the statistics that came out of this. Renters feel better about their financial situations, as 41% say they have enough money to last beyond each payday, up from 34% again in September. So again, a very short period of time. Those who say they can't afford essentials slipped from 20% to 14% in that same period. Those who say they have enough to cover their expenses from one paycheck to the next remain steady at 45%. Financial confidence rose for renters of all age groups, no matter where they live. So already a 1/3 level of softness on the part of the millennials still living with mom and dad. And even the 10% of folks who are leaving those homes, and odds are folks who are leaving mom and dad's home aren't jumping into purchasing. They're probably jumping into renting. When we see this data about the feelings about renting, these renters are less likely to become buyers. Now, if this trend continues and the feelings towards the purchase of a home versus renting a home continue, it seems to me that there would be a natural attrition that would reduce the number of buyers in a marketplace. And as I said, we're already overloaded, right? So there can be a period of time where this happens, where the number of buyers goes down and you don't really notice it. You don't really see it, right? It would be one of those scenarios where a home goes up for sale, 12 offers are made. It still sells for over asking price. Home goes up for sale 2 months later, there's 10 offers on the property in the same neighborhood. You're not going to really start to notice statistically that we've seen a drop in buyers until that gets down to the point where you're not seeing so many multiple. So you're seeing so few offers on properties that we're starting to see a shift, and properties are starting to go for less than asking price more dominantly than going for over, right? That's the tipping point. Now, by keeping track of some types of data, we might be better equipped at spotting this trend. And again, I think the best one, if you guys have a better one, I'd love to hear about it. But I think the best one is pre-approvals. Folks contacting mortgage companies to get pre-approvals. Now, that's also a tough one because oftentimes it's something that only happens right at the last second as they're about to make a purchase on a home. But it would still be valuable data. It just wouldn't give us as much lead time, right? It would be very right on the edge of when the difference between when you know that person is a buyer and you can calculate it statistically is just super narrow. But interesting to contemplate, right? Is it something that would give you enough confidence that you think prices are going to go down? Now, we've talked about a lot of other things that may push prices down, and I guess you come down to a point where you say, okay, we've looked at all these various things. There are a ton of different angles from which you can look at this marketplace. And looking back in the rearview mirror, what is the preponderance, right? What's the majority of data tell us? Does the majority of data tell us that properties are going to continue to appreciate, or are we going to start to see a slowdown? And, under normal circumstances, I'd go out on a limb and I'd try to tell you which way to go. But I'll tell you what I'm doing. I'll tell you what I believe enough that I am basing what I'm moving forward and doing. As I've told everyone before, I am in the process of preparing my home for sale. I honestly think that we're at a point where there's a peak here. And I want to make sure I'm clear about what I mean by a peak. A peak is not just what you can sell your home for. I get that a lot of people see that, but remember, when you're selling a home, as soon as you've sold your home, you become a buyer or a renter if you follow in with the rest of these folks who are excited about renting. But there's also the rehoming costs, right? Because when I'm thinking about selling my property, I'm also thinking, what's it going to cost me to get a loan on the next property? All of those types of things come into it. So I'm actually trying to find the spot where I'm able to sell my home for the most amount of money and acquire the next one for the least. Interest rates don't concern me, as I just said at the beginning of this show. I think interest rates are going to be okay for someone like me for, I would guess, at least the next year. I would guess till this time next year, I would be willing to wait that long on the assumption that I'm not going to really pay much more than 4% for a loan on a home. May change later in the next year, but for now, I think I'm good. So the next question is, do I think things like this and other things we've discussed are going to kick into gear enough or have enough of an effect on the marketplace that we see us slowing to the point where I can more aggressively negotiate for a property that I want and get a better price for it? Now, of course, that also means that I may have to take a little bit more of a gamble because I don't think my timing is going to be just right. In my case, I estimate that I'll be able to sell my home for what I'm hoping to, or maybe a little bit less. I've actually had a couple of comparable properties now that have sold in my marketplace that were not awesome in terms of backing up what my estimated value is. And again, that wouldn't change my strategy in terms of what I'm doing to my home. Whatever I'm doing to my home right now, even if I don't get the amount I'm hoping to get, the improvements I'm making will still pay for themselves or more. I have no question about that in my mind at all. But what I'm getting at here is, in order for me to take full advantage, assuming I'm correct, if I put my money where my mouth is, and I'm almost afraid to say this because then if I don't do it, what good am I? Is sell my home. Don't buy another home immediately. Figure out some sort of alternative housing situation, whether that's renting a home or living in an RV or living in a van down by the river, whatever. My kids would kill me if I made them live with me in a van down by the river. Then pick my time. Instead of being forced into you must find the home that you can stand in this window of time while you're selling your property, I go ahead and bite the bullet and say, you know what? I'll go ahead and I'll move twice. It's worth it in terms of the amount of money that I potentially believe I'll save. And we'll have to see how that goes. I'll reevaluate. At the moment, I've got an offer in my hand on this place. I'll do my best to put together an awesome deal. I'll give myself some sort of window of time. But if I don't find anything to buy in that window of time, if I drink my own Kool-Aid, then the next step would be to find another alternative, to wait out the market till things occur that I have sort of laid out here in the show in terms of things that I think are going to happen. So we'll see how that all goes. Now, of course, so much of what we've talked about today is general across the country stuff. These are, when they talk about these numbers, they're always doing the average for the nation, right? Take a minute, sit back for your local communities and figure out what the truth is, the ground truth for your communities. And I find myself doing this a lot, trying to figure out exactly what's going on where I am, so that I can make better decisions. And I hope you all do the same thing. But I hope for at least today, you're going to take a few extra minutes to sit back and ponder the possibility that the solution to the problem may not come from just building new homes. It may come from a gradual reduction in the number of buyers out there based on preferences that we're seeing increase in the most dominant marketplaces in terms of the most dominant consumers, the folks we expect the most action in home buying, because they're not saying I want to buy. They're more of them are saying I want to rent, and more of them are saying I'm staying at mom and dad's house. So it'll be interesting to see how that pans out. I hope that's been good information for those of you out there, whether you're a buyer, seller, investor, what have you. I'm always out there to try to give you the best possible info and things to consider when it comes to you and your interests in real estate. Truly appreciate you taking the time out. Thanks for listening, everybody. Have a great weekend, and I'll talk to you all next time.